No, we're talking about the entire crypto space. So the market cap of the space, about 2.5 trillion. It's going to go to 250 trillion by the end of the decade. That's astonishing.
Today we have Raoul as he speaks on his prediction on investing in the crypto markets and cryptocurrencies. Powell predicts that the future of every single contract via legal contract and insurance contracts will be on the blockchain. In the past 18 months, cryptocurrencies have evolved and its expansion is quicker than ever, but also its future is more clear than ever. Powell believes that there will be over 2 billion users of the blockchain within the next 4 years. This number is faster than the internet's adoption within the same time frame. Since November 2021, cryptocurrency has lost 70% of its value. Raoul Powell will share his thoughts of the future of cryptocurrency and how you may be able to benefit within the next 4 years.
Even the China ban, I don't think sticks around for long. I think what they wanted to do is make sure all assets were converted into the digital yuan. And then once they had the digital yuan, they can then track where money flows go because they've got a closed capital account. So I think that is also true elsewhere. I think Europe is just a little bit nervous about losing control, but we've seen Singapore do a decent job here. India's been struggling a bit. The UK has made it very clear that they're headed this route. Switzerland's done a great job. And the US looks like that they will follow suit and do the right thing in the end. So I think regulation is going to be a good thing because we'll have clarity of what we can do.
This is the first time in our current economy that the value of an asset class has fallen more than $1 trillion. Celsius, a Bitcoin loan service, has halted all account withdrawals within the last week, fueling speculation that currencies may collapse. Raoul Powell predicts all the deflation will be fixed within the next 4 years.
Actual way to look at any of the price action is using a logarithmic chart. And you'll find that actually all smooth. It's the same for Facebook, Google, and Apple, and all of these others. They're just smooth logarithmic charts, but within that, there's a reasonable amount of volatility. And that's normal. So in the early days of Amazon, it went down 95%, then 65%, then 65% again, then 40%, and then now the corrections are no bigger than 30%. So Bitcoin went down 90% the first time, 80% the second time, 75% the third time, and now it's 50%. So the volatility goes down over time as more people join the network. And that network change has also been the adoption of institutions and family offices and others into this, because this started out as a retail thing, which is incredibly rare. We've never seen an entire revolution like this started at retail level. It's usually started at institutional corporation level. I mean, Bitcoin is not even a corporation. I mean, there's nothing. You know, it comes out of nowhere. It's that. And the space is, so if you understand that, you'll understand that within the next 4 years, we will be at about 2.5 billion users. It might be even more. And by the end of the decade, we'll about 4.5 to 5 billion.
Many other assets are experiencing volatility, which is causing concern amongst investors. This week, the S&P 500 index slipped into the bear market territory, which is a 20% decrease from the most recent high. Bonds are also falling, leaving investors with limited options in the market.
So, I mean, I am 99% everything else but Bitcoin. Because the rate of adoption and the growth of the networks in the space are much faster elsewhere. So I think that Bitcoin's dominance over time erodes. Michael Saylor is a Bitcoin proponent, and he is what's known as a Bitcoin maximalist. And that is a person that believes that the future of everything can be done on the blockchain for Bitcoin. Currently, that is not doable, but that's his perceived future, that all finance ends up, it's only one money that can happen. That doesn't look like that is going to be the case, but that is his view, and he's worried that maybe these others will get regulated. Again, having spoken to most of the regulators around the world, they are not going to suddenly ban Ethereum or these things. Are there fines for people like XRP, Ripple? Probably, because they started in a way that maybe didn't work for securities laws. But in the end, nobody's going to get in the way of this.
Unlike the banking crisis in 1907, it is not clear if the latest cryptocurrency crash will lead to the creation of new centralized entities. The more the cryptocurrency world tries to avoid reliance on the federal government, the more its largest player will play a similar role instead.
So I don't hold that view that Bitcoin is the one true God. I think it's a multi-chain world, and investors will make massive alpha from allocating to other cryptocurrencies and catching this adoption wave, the Metcalfe's law. You find the right ones and they will massively grow over time, much like Bitcoin did in its earlier days. But over time, since having that conversation with Michael, my bet in Ethereum has massively outperformed Bitcoin. It was up 4x versus Bitcoin last year.
The recent plunge into the crypto market seems to have had NFT bubbles burst. It is true in a sense, but it doesn't mean technology is useless. The role of NFTs expand explosively as they extend beyond high-stake investment products. An NFT has value because the buyer and their community feel it does. This is true of all art and collectibles. And over time, an NFT develops its own personality based on who owns it and how they utilize it.
NFTs are the ability to transact, store, and have ownership for any single asset on the chain, a unique asset. So the difference between non-fungible tokens and fungible tokens is essentially that. Fungible is like, I give you $1, you give me $1, it's the same thing.
That's a usual social token. Yeah.
Or a social token is fungible, but this could be a specific piece of art, an insurance contract, a derivative contract, anything.
Yeah.
Compared to 2018, older consumers are starting to invest in cryptocurrencies at a much faster rate. In the United States, consumers over the age of 35 make up almost 40% of the consumers who expect to invest in cryptocurrencies in the next 6 months.
No, we're talking about the entire crypto space. So the market cap of the space, about 2.5 trillion. It's going to go to 250 trillion by the end of the decade. That's astonishing. So the volatility is a feature and not a bug. So if you should be expecting 50 to 70% downsides in anything that you own in this space, and you should be expecting 10, 20, 30, 40, 50x over periods of time. So therefore, the risk reward is always the best risk reward you've ever seen. And the only way to figure out if the risk reward has changed is if it breaks that log channel I was talking about, the logarithmic regression channel. If it starts breaking that, it tells you the network is now not growing, which, as you said before, how do I know this network's going to keep going? Well, you'll be able to tell from the chart whether that's going or not. And yes, you will have lost 50, 60% at that point, but you'll be able to figure out, okay, I've got a broad allocation. It's not going to happen to the whole market. There'll be whole periods, much like equities going up and down with a cycle, fixed income goes up and down with a cycle, commodities do too. But over time, the exponential element of these assets make everything look like a call option always. And that is incredibly powerful. This is why you actually don't need such a big allocation as I've got to make extraordinary portfolio returns or diversified returns. In the short term, the space is somewhat correlated to certain things. It's correlated to the dollar, obviously. It's correlated to risk equities. But that's in the short term. If you ever look at a long-term chart, it doesn't look like anything.
So if you've been tempted to invest in the crypto market but haven't because of the current crash, let's work out how we can lower our chances of losing money from Raoul Pal.
So volatility is your friend. If it's down 50%, you should be allocating as much asset as you possibly can to it. And if it's down 70%, the broad space, you should be putting as much as you possibly can into it.
We must win this financial war. Subscribe to keep learning the truth.